I think team soft landing is dead wrong. I think labor hoarding in the US, among other factors, while also just base effects. Unlike some gold bugs out there who will remain nameless, I have been warning people for more than a year that the base effects would mean that the reported CPI numbers would come down. It would be harder for them to keep increasing at that pace, absent more money printing, which we haven't had.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, is there going to be a soft landing, a hard landing, or a moon landing, a lunar landing? That is the question. And hey, maybe if they replaced our policymakers with AI, we would never have another recession. What do you think about that? Well, Lobo Tiggre is on with us now, and make sure you go over to his site, independentspeculator.com. Hey, great to have you back, Lobo. So as you referred to them pre-call, team soft landing, they seem to think that everything is fine. We'll just have a brief slowdown, and then, inflation's under control. Maybe the war in Ukraine will end at some point in the not too distant future. So what say you?
Well, there's a lot of ways I could go with that, Kerry. I want to come back to the AI thing, because I think there's actually something very important and investment related that people should keep in mind, not just ideological. But to answer your question, I think team soft landing is dead wrong. I think labor hoarding in the US, among other factors, while also just base effects. Unlike some gold bugs out there who will remain nameless, I have been warning people for more than a year that the base effects would mean that the reported CPI numbers would come down. It would be harder for them to keep increasing at that pace, absent more money printing, which we haven't had. So I'm not surprised by the circumstance. I will say that I am surprised. I'll go on the record with you here, Kerry, and say I am surprised by how quickly and how deeply the reported inflation numbers have come down. And this matters. And I know, dear audience out there, I'm sure you're as skeptical as I am of government statistics. You know, there's lies, damn lies, statistics, and then the ultimate is government statistics, right? I get that. I'm not saying I believe these numbers.
That's redundant.
But, the COMEX traders and LME traders, they trade on these numbers. And as long as we mistakenly refer to their trades and their futures contracts as the price of gold or whatever, it's going to push those prices around. And we can't ignore that data, even if we disagree with it. So what I'm saying, though, is for these and a number of other factors, I think the US economy is much weaker than it looks. The global economy is as weak as it looks, and maybe more some. I mean, we don't have to worry about the hidden weakness in the global economy. Just look at China and the EU, where inflation popped back up again, by the way, including the all-important so-called core inflation popped back up instead of down. So I think, I'm sorry to say this, and you know me, and any of your audience that has watched our past interviews, and if not, go back and check them out. I'm not the arm waving, the sky is falling, head for the Idaho bunker now sort of guest that you might have on sometimes. But I really think that the brown stuff is going to hit the fan. And it's not someday. You look at Main Street cheerleaders on Wall Street, and they're like, even the most bearish of them is thinking, well, maybe recession in 2024. I think that the weakness that is masked in the US economy will be revealed this year. And I'll either be flat out wrong on this, Kerry, or I'll be right. If I'm right, it will make a big difference to our investment decisions.
Well, I'm inclined to agree with you, because I believe we've been in a recession since inflation spiked, but because inflation's understated, the GDP deflator, which is basically you deduct inflation from GDP, has been askew, and real growth has been decidedly negative. And look, anecdotally, you go around any city in the United States, the number of homeless people has increased. that's generally
And
not
empty
a positive.
storefronts and all that. Yeah, I mean, like,
Right.
every time we see, I remember just yesterday I tweeted about the lower inflation in Canada. And basically all of my Canadian followers are all like, what? That's not what I see when I go in the store or when I go anywhere or do anything. My costs keep going up. Actually, this touches on something that's a big pet peeve of mine. I'm writing about this now, so your audience gets a head start on this. The whole word disinflation shouldn't exist. That should be stricken from everybody's vocabulary. There's really no such thing. It refers to a decrease in the increase in inflation. It's still increasing, right? I mean, and to put this word on it, people bandy it around, disinflation. It sounds like deflation. It sounds like a good thing. It's not a good thing. It is a somewhat less bad thing, right? But that word is out there and everybody can talk about disinflation like things are getting better. It doesn't mean things are getting better. So pet peeve of mine, and it relates to what we're talking about. And it's part, I think, of a deliberate, messaging, massaging, manipulation, if you will, of the populace. It's propaganda.
It's just like transitory inflation, focused, tested, and proven in action until it was disproven in reality. But it was a great talking point, and it's just
but a talking point with a purpose. Yeah. I mean, it wasn't just like, oh, they chose the wrong word, or oh, they made an honest mistake. It's a completely dishonest unmistake. It was a deliberate effort to try to, push the herd in the direction the powers that be wanted it to go.
Newspeak. Hey, it's just like in the Great Depression, and they said prosperity is just around the corner, right? That was the talking point.
And let's not forget whip inflation now.
Yeah, I was giving away win buttons. Somebody sent me an email requesting a win button. I bought a few of them on eBay, and that was Gerald Ford's big contribution to inflation. As if, hey, maybe they should have been wearing it at the Federal Reserve, put that over their doorstep, right? Because Milton Friedman said it best. Nobody will ever say it better. Inflation is first and foremost a monetary phenomena. And what does that mean, Lobo?
Well, actually, right now, it's important for those of us who make that quote, always and everywhere, a monetary phenomenon, to recognize that M2 has been shrinking. The Fed has been reducing its balance sheet, and I'll admit, more than I thought they would. They've stuck with that more than I thought they would. And okay, again, government numbers, I get it, but still, those are the numbers that people trade on. They put input into the equation. So if you're going to say when the M2 is increasing and the money supply is increasing, oh, this is inflationary, you can't then turn around and say when it's decreasing that it doesn't matter. It's just a government lie, right? It's that same number. True. So, I mean, this matters for us right now, and it's interesting to me that in that environment where we've seen a significant decline. Okay, it's not like healthy, happy, hunky-dory, but it's a significant decline in M2. And here we are at gold still around $2,000 an ounce. I mean, that's really quite striking. The appetite out there for gold in the face of headwinds like that, and higher rates and the Fed tightening, all this stuff, if there's people out there pulling their hair out because gold isn't higher, it should be 3,000 or it should be whatever. But the fact that it isn't down when it seems like the powers that be are throwing everything they can at it, I think it says a lot about the strength of the demand out there, or the perception of the reality, despite the propaganda and the spin that we're talking about. There's people out there that get it.
Yeah, absolutely. Hey, let's not forget, M2 is down, but the emergency facility to keep the banking system afloat every week for the past month has been hitting record drawdown, which is really another way of calling it QE, because basically they just take all their crappy securities, drop them off at the discount window, and they get
sorry, let me jump in on that, because I think that's really, really important, Kerry. You just put your finger on something that I think the mainstream is either ignoring deliberately or just doesn't get, but I think is very, very important. The powers that be, they're all telling us everything's fine. The regional banking crisis, it was just, concentrated in a few poorly managed banks. The banking system is sound.
Yeah.
Everything is fine. Nothing to see here. These are not the droids you're looking for. Move on, right?
Yeah.
But this facility that you're talking about, what the Fed did, that's not just a Band-Aid and a kiss on the boo-boo. That is an absolute crisis response that basically bail everybody out without bailing them out. Like, we're not giving you just the bailout, but we're allowing you to redeem your underwater paper at par, right? That's a bailout. And it wasn't just a few banks. It was everybody. It was across the board. Like, that was an absolute emergency response. It seems to have worked for the time being, right? Kick the can down the road. But don't let them kid you. Don't let anybody tell you that was a nothing burger, that nothing really happened here. That was major. And
right.
I think part of our earlier conversation, what will reveal Team Soft Landing to be wrong. When will we get our payday, Kerry? I can't tell you when. I can't promise when. I think things generally will be inclined to fall apart over the next quarter or two. But don't forget that there's still this crisis mode out there. They've been, like tamping down these fires left and right. Yeah. But that doesn't mean there's no more fire out there. If the Fed breaks something else, and that could be happening already. Like, the next thing that breaks, I think, is probably already broken. We just haven't realized what it is yet. Like the gilt thing in the UK and so on. Something happens, and until it goes vertical, until it really breaks in a visible way, and then you look back and you say, "Oh yeah, well, we should have seen that coming." Or I think we're in that process now. So we'll see. I'll either be right or I'll be wrong, and it won't be like forever or someday. It will be this year. I think either things deteriorate just on a progression, or the Fed breaks something else. I'm inclined more to the latter. I think we're more likely to see a sudden wake up moment, smell the napalm, and Wall Street starts to panic.
Yeah, love the smell of napalm in the morning. Hey, let's also not forget about China, the so-called engine of growth in the world. Now, you talk about government statistics, the ultimate lies. I mean, you can't believe if they tell you the sky is blue, you definitely can't believe them, because you very rarely see a blue sky in China. It's usually gray, dark gray, or weird colors from all the chemicals being pumped into the atmosphere. But by all accounts, their housing market is DOA. Evergrande just closed its doors permanently. I mean, they were on zombie life support for the past 6 months. And every other major real estate company probably is going to follow suit as well. And that's like, yeah, maybe it's good for flight capital coming to the U.S., right? Because they've been so far.
That's a pretty slender silver lining there, Kerry. Yeah. But and they're really caught between a rock and the hard place, because I mean, Beijing very deliberately clamped down on the excesses in the real estate market because it was going crazy. They had used it to stimulate. It got out of hand. It created all kinds of never mind the ghost cities, but these insolvencies. Unsound business practices writ large. Okay, so they pull it in. They clamp down on it. Fine, it makes sense. But if that's what your growth depends on, and you choke it off, what's going to happen? There's people who are saying, "Oh, well, look, China's last GDP report, 6.6%. That's great." But even in the mainstream, there's people who are recognizing, well, wait, not so fast. A year ago, they were still in lockdown. So it was expected that the GDP numbers or lies or whatever they are, the numbers that we get, would be higher in the first half of this year because of those base effects.
Yeah.
But that goes into reverse in the second half of this year. And even mainstream people are worried that this 6.6% now is nowhere near enough for China to hit its 5.5% by the end of the year. So I mean, I agree. I think that's very worrisome. And to bring it back home a bit, we mentioned earlier how Team Soft Landing is cheering here in the US, but it's more evident around the world that there's trouble. China is the 800-pound gorilla of economic trouble right now. And I think it's a mistake for, Americans to think that somehow the US economy can be just fine when the rest of the world goes to heck in a handbasket. Yes, we have more, food and oil and gas internally than a lot of other countries. We depend less on our trading partners than many other more vulnerable blocks. But that doesn't mean we're fully independent. And despite everything that's happened after the new Iron Curtain has started going up, and despite the post-COVID deglobalization, it's still a global economy.
Yeah.
And you could say, okay, well, the U.S. economy only depends, or the S&P 500, I think only a third of the stocks are exporters. Well, but if that third goes to zero, not to zero, if that third crashes, it still hurts, right?
Oh yeah.
And the entire economy, it is resistant to external harm, but not immune. And it's a mistake to conflate those two.
Yeah, you're exactly right. We haven't decoupled from the global economy yet. And those trends, I mean, in China, you see parts of Shanghai, the videos escape where literally all these stores that were booming pre-pandemic are shut down, and whole areas of Westerners have left. Large chunks of Westerners have shut down and left the country. So, yeah, I think it used to be when the U.S. Sneezes, the rest of the world got a cold. Now China sneezes, I think the rest of the world gets pneumonia, and that's just more evidence to what you said, that the hard landing is imminent, and the Panglossian view of those out there, that everything happens for the better, isn't true. Everything doesn't happen for the better, especially when it comes to a weakened global financial system that had a near existential event in 08 and 09, and we've done nothing to change it. Still the same system.
So, takeaways: financial survival network. What can we do to be helpful to people? My fellow gold bugs don't like it when I say things like this, but I actually think that in the nearest term, the very nearest term, the appearance that Team Soft Landing is right is bearish for monetary metals.
Yes.
If the safe haven demand goes down, if the people who have been thinking, oh, well, maybe we should consider allocating, just a little bit to gold, if that stops, that's material. Maybe central bank buying makes up for it. Maybe we're at $2,000 gold plus or minus because of central bank buying, despite Team Soft Landing appearing right. But you can't count on the central banks for anything. I'm sure your audience doesn't need me to tell them, not to trust central banks. So if the gold bugs' hopes are all pinned on the central banks are going to save us, that's not a great thing to put a lot of weight on.
Okay.
So I don't trust them, and therefore, even if they do keep buying, even if BRICS are headed for gold-backed currency or whatever, that's a multi-year thing. It doesn't tell us that right now they're going to help us right now, and that's important in the face of this. So, I'm not one of these people that says every day is always the best day to buy gold. Buy. I think right now it is actually prudent to hold back gold and gold stocks, to watch for potential weakness in the nearest term. People are tired of buying opportunities, but I do think that's what it would be. From everything that we've said in this interview so far, the nearest term pullback would be before the next leg upwards. So I'm not saying, dump all your gold stocks, forget gold. I'm not a drop gold guy. I'm just trying to be honest with your audience here. Instead of just being a cheerleader and promising it can only go up. I think there is a significant risk of near-term downside in our favorite metal. Now, here's the funny thing. Sorry, I know you've got a question there, but let me just say, the funny thing is that silver might actually outperform in this.
That's
if
just what I was going to say.
Landing seems right, then hey, that's great for industrial metals. And silver's industrial side has, even the most diehard silver bugs recognize that silver's industrial side has become a tailwind when, they're building more solar panels and all this stuff. So, oddly enough, the very thing that could whack gold in the nearest term could boost silver. And last time I looked, silver was over $25 an ounce, which it has trouble getting over recently. So that's interesting. But then reality comes back.
Yeah.
And if I'm right about that, if we're right about that in the recession, clearly that's going to whack industrial metals. And I think that'll happen by this fall, so be very wary of saying, oh, it's all safe to get back into copper or lithium or whatever your favorite industrial metal might be.
Hey, I just knew at $17 silver was a raving buy. It hit a low of 17.14, on the COMEX, and it's gone up $8 an ounce. So that's nearly 50% that it's gone up in just a couple of months.
People get mad at me because I talk about silver's greater industrial side. I've been dubbed Darth Silver and all that because of this changing use case. But the goal is to make money, not to be religious about our favorite metal. And if the goal is to make money, you can't ignore the data. And just look at the charts. Silver is tracking copper more than gold this year. And while T soft landing seems right, that's a fine thing. When the recession deniers give way, which I think they will, I think that's going to whack silver more than gold. I'm not trying to beat up on anybody's favorite metal. I'm not trying to cheerlead anybody's favorite metal. I'm trying to provide the most straightforward, reporting and analysis of market trends that I can.
Yeah, I'm in complete agreement with you. Hey, when there are liquidity events in the market, in the stock market, it always hits the metals. We've seen that over and over and over again. So if there's the event that you're talking about coming up, the hard landing realization, if that turns into a liquidity event, metals are going to get slammed in the short term. And, metal stocks are also going to get slammed. And eventually they bounce back. 08, 09, it's a perfect example
2020
of your thesis.
But this is actually another important thing, because it really is worth stressing and thinking about, dear audience, because gold bugs, and I'm a gold bug, but most of us, we have the skepticism of the mainstream, and that feeds into an assumption that they're doing something wrong, right? And that feeds into this. It's like, let me put it this way: what year do most gold bugs not think Wall Street's about to crash? It's every year. And okay, some years it does crash, but most years it doesn't. So even if we get this recession and the recession denying goes away, as I think it will, that is not the same thing as saying that markets must crash. And markets are very forward-looking. The markets may see the recession and rally because they think the Fed and the Congress will come to the rescue. So it is not safe to assume that even if we're right about the economy, that therefore Mr. Market should do the rational thing. He often doesn't. As the saying goes, remain irrational longer than you can remain solvent.
Yeah,
so
exactly what I was thinking.
The point here of my rant, and I just think this is important, because I get an email or a call or something, like, if it's not weekly, it's certainly monthly, of the markets are going to crash. What should we do? Shouldn't we sell and get out before the market crashes and then buy back in at lower prices or something like that? At some point, that might be the right thing to do, but nobody knows in advance. And like I say, if gold bugs think that way every year, and they sell, and they sell their gold stocks because they think the market's going to crash, and then it turns out that it goes the other way, you've made a huge mistake. You've either jumped, bailed on winning plays too early, or you've realized unnecessary losses. Yeah. So I'm not trying to tell anybody that there's not going to be a crash this year. I think it's possible, but I think it's a mistake to assume that that there will be. And certainly it's worth being careful about in your actual investment decisions.
Absolutely. And just reminds me of Yogi Berra's old yogiism that, prediction is very hard, especially when it's about the future. So remember that it's difficult to predict the timing. You could follow cycles and make a lot of money, but following a cycle is different than predicting the future and actually how things are going to turn out. Cycles, it's a trend, and if you can catch them, they're great. But
you see it's in motion, right? It's a very different thing to say, hey, look, this is trending upwards, I'm going to go long, or this is trending downwards, I'm going to go short. That's very different from saying this is the bottom, right? Or this is the top. That's an entirely different level of peril.
Exactly. All right. Well, hey, we appreciate you coming on as always, Lobo. And I urge everybody to go to Lobo's site, independentspeculator.com. And the link is in the show notes to this interview on financialsurvivalnetwork.com. Just click it. You'll get through. While you're there, sign up for your free newsletter. Lobo, always a pleasure. Thanks for stopping by.
Thank you, Kerry. Good conversation.